Welcome to the new weekly outlook for the first week of June 2025. As always, we're going to go over the fundamentals first and then move on to the technical side. This week is NFP week, so a lot of the attention is going to be on the employment data, especially during New York session. And then also on Thursday, we have two important meetings, one between Trump and Japan's top negotiator on Thursday, and then same day is going to be Trump and Germany's new chancellor. Starting off with the employment side, we see that the US job growth has started to slow down, where the labor market is starting to slow down in the US, where we're expecting to see that NFP is going to rise by just 125,000 after the massive increase and the solid strength that we saw recently in the last few months of almost 200,000. Unemployment rate still remains steady at 4.2%, while the job vacancies are declining. The industries that are being hit the hardest is the leisure and hospitality due to weak tourism and government cuts. Construction, transportation, and warehousing, on the other hand, are seeing job growth. So this overall reflects that early stage labor softness, which is not a crisis, but a turning point towards a late cycle dynamics. And the companies are cutting hiring due to uncertainty and slowing revenue due to tariffs. Trump's trade policies, still the uncertainty continues, and that is causing businesses hesitation in hiring and investment. The tariffs are aimed at reshoring supply chains, but the short-term impact is inflationary and growth negative. The consumer spending is also starting to slow down. So the US consumer, which is a key pillar of growth, especially in the US economy, is starting to pull back, which is a signal of weakening domestic demand. And overall is putting a drag on the GDP, especially going into Q3 and Q4. In Q2, we saw pretty solid numbers for GDP, as better than what we were expecting basically. But that was because of the exporters, which are front-running tariffs, which temporarily improved the GDP via the net exports, but it's not sustainable. Hence, we're expecting a bit of a drag on GDP going into Q3 and Q4. While the Fed is still in that watch mode, wait and see mode, to see the effects of the trade policies on inflation and consumer demand, the rest of the world, rest of the central banks are now turning dovish. So we're starting to see that the global liquidity is improving, but it's still not bullish for equities. And the rate cuts are defensive reactions to the soft data that we have been seeing so far and not pro-growth tools. Moving into the next article, we have stocks drop, gold rises as trade frictions ramp up. We're seeing that risk aversion is back. The markets are shifting from being complacent to cautious due to Trump's aggressive trade pivot and the fiscal uncertainty. Now Trump is starting to double down on tariffs. Steel and aluminum tariffs increased to 50%. And Trump also accusing China of violating trade agreement, and Chinese officials have come out and made a statement that they were going to retaliate as well. Overall, this is a 2018 style trade war, but in a more fragile global context. Later this week, we're also going to have Japan's top negotiator returning to the US for another round of talks right before the G7 meeting on June 15 and 17 in Canada. So we're going to wait to see if there's going to be any sort of progress that's going to happen there, and if we're going to get any hints basically from that press conference. We're also going to have Germany's new chancellor coming to the US as well. And the key points here, or the topics, are going to be Russia's war in Ukraine, Middle East tensions, and trade disputes between US and Germany. Germany's trade surplus and its regulation of US tech companies are going to be some of the friction points here, and also the European Union's retaliation risk, where this chancellor's camp has floated a 10% tax on US tech firms, which prompted the White House threats of countermeasures. And then also we're going to have the chancellor trying to curry favor by committing Germany to a 5% GDP military spend, which is more than double of NATO's expectations. So once again, we'll see if we get any hints on the trade relations between US and Germany, and that's pretty much what the investors are watching out for this week. Coming on to the economic data points, this week we're starting off quite easy with some bank holidays. Going into Monday, things pick up a bit more in the New York session with ISM services PMI coming out. 30 minutes after the New York Stock Exchange opens up. And then after that, you have Powell speaking. So again, investors are going to be watching out for that to see if there's going to be any sort of hints on what are we expecting. But most likely the sentiment is that the Fed is in that watch and see mode right now. Then you have CPI coming out in pre-London session from Switzerland. And then continuing down, you have Bank of Japan's governor speaking on Tuesday. And then JOLTS job openings, first data point, employment data point coming out from the US, which is going to set the tone for the remainder of the week. And what are we expecting with NFP on Friday? Continue down, if you're trading the Australian dollar, then in Tuesday Asian session, you have GDP quarter by quarter coming out. And then continuation on to Wednesday, you have, again, another employment data point coming out from the US in New York session, where the previous was 62. We're expecting a hike up to 110. But let's see what the data point ends up coming out. Then you have some FOMC members speaking as well. Another thing that the investors will be watching out for any sort of hints. And then if you're trading the Canadian dollar, then you have interest rates coming out also on Wednesday. So that's going to be an important day along with the press conference. And then if you're trading any US equities or US dollar or even gold, then you have the services PMI coming out from the US. Thursday, we always have unemployment claims coming out on a weekly basis. So that's another data point. Also, then you have also the interest rates coming out from the Eurozone. So if you're trading the Euro, that is what you want to be watching out for, along with the press conference. Continue down onto Friday, which is the NFP day. And again, we're expecting from 177, we're expecting 130 here. So around 125, 130. Let's continue on to the technical side. I have some of the fundamentals mapped out here, which are going to be the high impact for US30 here, starting off with the weekly. Last couple of weeks, we see that the candles have been testing the highs and lows, but for the most part, we just come back and kind of close in this range for the past 3 weeks. If we just extend that over to the left, then we see how this is a liquidity area. Anytime price breaks out of it, there's a ton of volume that follows. And that's pretty much what we're expecting here, where the market is generating liquidity because of the uncertainty in the global markets and waiting for a fundamental push in either direction. Based off the weekly time frame, we have a support that's being formed right here, which is going to be 41,580. And then the previous week's top wick rejection, which is the last high, and that's going to be 42,730. Let's drop down to the daily time frame. On the daily time frame, we start to see how the last 2 daily candles, so Thursday and Friday, very little volume, where Thursday we did try to come back and test the highs, came back, rejected that, and kind of closed around here in this ballpark area. So if price is going to continue pushing below these areas, then I'm looking for some sell opportunities to come back down into the support. If not, and price pushes back up, then I'm waiting for this level here to be broken and then look for buying opportunities to the upside. It can start off with a quick scalp just to come and tap into this, or it can be a continuation to come back and tap into these previous highs. Anything in between, I'm not really looking for a trade. As we drop down to the 4-hour time frame, you start to see how all of that, it's also just a huge consolidation zone. You really don't want to be trading in consolidation. So what I'm going to watch out for is these candles to come back and close below these areas, and then the following candle to continue pushing down just so I can avoid a fake out. And that's my sell opportunity. If price rejects this and pushes back up, then I want a candle closure above the zone, and the next candle takes me up, and that's the entry that I'm looking for. Anything in between is going to be a no trade zone. And the key fundamentals that I'm watching out for is, again, the ISM services and services, manufacturing and services PMI, Powell speaking, employment data, and also Trump's meeting on June 5th. Coming on to GBP JPY, something quite similar where the previous couple of candles have just kind of been hanging around here, so not a lot of volume for GJ as well. You have your 193.9 as your resistance. You've got your support, so I'm going to mark off that bottom wick rejection here, which is 191.9. And as you drop down to lower time frames, you can absolutely adjust these levels. So instead of marking off here, if you're more comfortable with something like that, that's perfectly fine too. So that would be your 192.7 mark based off the daily time frame. And then let's come on to the 4-hour. So on the 4-hour, we saw that there was a lot of consolidation. It seems like price is starting to break out of that consolidation. So what I want to see is at this level, if there's any price action, any previous consolidation, etc., I want price to clear all of that before I can start looking for any potential sell opportunities. So at this point, we see how price has tapped into it several times, rejected it several times. So here you have that fake out and then a massive sell off. Same thing here, rejected that, a corrective move. And then finally, when we broke above that, and then we have that massive bullish momentum, price came back, consolidation here. So a lot of price rejection right into this area. So before I look for any sort of sell, I want candle closures below this and then a continuation down. So something like this, a candle closure and then a continuation down. Same thing here, candle closure and continuation down. If I'm looking for any buying opportunities, I want price to reject off of this and understand that the limitation of my trade is going to be that 193.9. And then if there's any fundamentals that support it, then we can look for a continued buy opportunity to the upside. So for this, Thursday can be a very big day, especially with Japan's top negotiator and Trump also meeting, and then also Bank of Japan's governor, who's also going to be speaking this week. So we can get push from those two main fundamentals as well this week. Anything in between, I'm not really looking for a trade, but if you're looking for a quick scalp, then like I said, understand the limitation of your trade, and you may have a potential 44 pip trade after price rejects this as a support and then continues back up. If it's just bouncing around here, then you just wait for 193.9 to be broken and a continuation for buys, or break below the support and then you have your sells down there. USD JPY, again, you have your fundamentals right there. This is also bouncing off of a key support area, as you can see. Price has bounced off of it several times in the past. And that is your 142.5. And then I'm going to mark off that top wick rejection here, which we can also adjust as we drop down to lower time frames and see better candle closures. Come onto the daily time frame, a massive top wick rejection, and then came right back down. And so right now, if I'm looking for any sort of scalp opportunities or day trades, I want this daily candle to break its own low and then continue pushing back down into the support. Once it breaks its own low, you have about a 78 to 80 pip trade that you can look for. And then if price just holds on to a support here and pushes back up, then you drop down to the 4-hour or the 1-hour time frame. And based off of that, you have your buy opportunities right here for intraday trades. So if price can hold on to a support here, push back up and close above this area and continuation up, you have 40 pips targeting that consolidation high right here. And then a continuation up, this entire range is about 200 pips. So you have pretty good opportunities in either directions for intraday trades that you can look for. The only thing is avoiding this consolidation area here so you can avoid any fake outs. Coming to gold, gold is sitting at all-time highs and consolidating here. So we did try to break above a couple of weeks ago, and then last week we came right back down here. So you have 3331.6. And then you also have your support right around here. 3236. All of that in between is consolidation. So what you're looking for is quick scalp opportunities and a zone to zone trade. So here, based off the daily time frame, anything in between, you got your longer term sell. So you're basically trying to catch a scalp and turn that into a swing trade. Come onto the 4-hour time frame, and here I'm going to identify my no trade ranges, which is right around here. If price is hanging around in this area, I'm not really looking for a trade. If price can break above this and continue bullish, then I have a potential trade opportunity to the upside. The reason why I'm not looking for a trade here is because all this is consolidation. So if you're someone who struggles with understanding the limitation of your trade, or kind of just holding on to your trade too long, and even if it's going in the opposite direction, or you just don't have proper trading psychology, this is not the range for you to be trading in. If you're looking for a zone to zone trade and you're pretty good with your trading discipline, then this is a potential trade that you can look for. I want something that I can turn a scalp into a swing trade, so that's why I'm going to skip out in the zone, but I'm looking for potential trade opportunities for a scalp that I can turn into a swing trade if trade continues pushing back up bullish, because we do have a gap right here that the price has not filled in just yet completely. So that's it for this week. If you guys have any questions, as always, feel free to comment below or reach out to me on Instagram at SharmaFX.